If there's one company that doesn't need any introduction, it's our knowledge partner McKinsey. We invited McKinsey partners Jörg Moeshoff and Simon Kessler to share their vision on the future of insurance, but also to take stock on the current state of the industry and what is required to make the next essential leap. Please buckle up because their messages are all about the acceleration of digital transformation. For instance, the gap between winners and not so successful models that is becoming wider and wider. The pace of adoption of advanced technologies, which is far too slow, and if that's not enough to worry about, the lack of talent, which impacts not only the large incumbents but also the insurtechs. Next on DIA Primetime, Jörg Moeshoff and Simon Kessler.
Hi, my name is Jörg Moeshoff. I'm a senior partner from Berlin and very much looking forward to discussing today with you our perspectives on fintech and insurance and how we see the landscape evolving over the next years. Very happy to discuss today with you.
Hello, my name is Simon Kessler. I'm a partner from the Frankfurt office, and I'm also very happy to be with you today. And I'm very happy to share some of the experiences we made by building and scaling insurtech businesses and what are really success factors in this.
So let's get started. What you saw that the title of our presentation today is Boost. Why Boost? We believe that's actually in this environment the title which outlines how we see the perspective of insurtech over the next 2, 3, 4 years, especially in this COVID environment. For sure, as all of you know, the first months of the year have been pretty difficult, also for some of the insurtechs with respect to funding and also an environment which is not easy to navigate. But over the last few months, insurtech got strong traction again. And in an industry which is, compared to other industries, doing extremely well and is not facing so much pressure from COVID on top and bottom line, we see a lot of opportunities for fintech. What we discuss and want to discuss today with you is how we think about the positive momentum we have seen over the recent months. One of the key drivers is, for sure, COVID is changing the industry and deeply changing the industry. For sure, as you all know, we see traditional sales dropping. In some areas, it's just minor drops. Some other players are seeing much stronger drops. We see strong changes on the claim side, where especially in the months of the lockdown, now in the second wave of lockdown, claims have for sure fallen, frequency is going down, significant changes in the entire business model for insurers related to it. But at the same point in time, if we step back and see what it means for the insurtech and broader fintech space, we see also a lot of positive factors which are also now reflected in the increasing interest into the segment again. The first and foremost, the biggest point is widely discussed, but yet there are not so many numbers. And we try to really bring it to the point and say, what we see with the consumer is a dramatic shift in terms of usage of digital channels. So what we see is that you'll see here on one of our slides, how the digital adoption has really skyrocketed and really jumped. And let me also highlight especially the point that the channel usage. So how many industries an individual consumer is using via digital means is increasing significantly over the last months. So what we see is a real shift in demand on the consumer side. We see that the consumers are changing much more to digital means. And this is actually something which we would have expected only in 5 or more years ahead. So we can actually conclude already now that the environment will mean for most of the players kind of a 5-year jump ahead in terms of digitization. And that is also reflected how the industry perceives insurtech now. That goes that the incumbents focus much more now on even further digitization in sales, in claims, and all the key areas. But it also is reflected in the kind of very strong comeback after the summer in insurtechs and how the insurtechs landscape will evolve. What we have outlined also here to give you a few examples is how important the digital side has become in the meantime in the core of our insurance business. When you look, for example, into motor policies sold, you see over the last year a very strong increase actually in the portfolio, especially of motor insurance, which is sold digitally, whereas there is a continuous decline now as well on the more physical side. And we expect that to even further continue and accelerate. That outlines how big and important the digital side is. And the same goes also for all type of new sales, where we see not just for the portfolio, but also for the new sales, the delta and the kind of acceptance of digital means has reached a completely new point. And also in the internal processes, when we then look, for example, into claims, we see a very similar pattern. We see that the digital usage for even the core processes has kind of experienced a significant jump. As I explained before, we saw for sure kind of a reduction in frequency, which with a quick catch up then in the summer again, and now again potential effects from the second lockdown. But what you also see is that the switch to digital really happens, and that has for sure a lot of implications. As we know, there's a lot of the insurtechs focusing on especially these elements of the value chain, and we believe that this will be a further boost, that this digitization of also the core processes will be a further boost for the entire industry and especially for the insurtech space. Lastly, when we also talk about opportunities ahead, let's look a bit on where the market really stands. And one, I think probably one of the best measures we can look into is unit cost in the end, because this is the ultimate measure how we can bring our insurance products in the market. We took here an example of Germany and we just compared unit cost. First, you see how they evolved over time. And you see we actually so far made the progress in the sense that we kept basically with inflation rates, the increase in absolute unit cost. But what is even more outlining, I guess, still the opportunity out there is the big spread and the even further increasing spread we see among market participants. So in the market in Germany, and it's very similar for most of the other European markets, we still see a spread of at least 4 times unit cost, which will mean that especially the new players, the insurtech players, will offer a big opportunity in the market to gain market share and to also gain volume going forward. Lastly, when we also look into related opportunities, there is a lot of them, and we just listed a few of them here. We believe both on the P&C side and the life side, we will see further growth ahead, and a lot of insurtechs are focusing on these spaces. Cyber is one topic which is, including prevention, getting more and more attention, and we just give an example of here of how the market is evolving now dramatically in a positive way. But there's also a lot of others. We talk about electronic devices. We talk about also business continuity, something all of you know, it's a very widely discussed topic now in COVID times. That might also be just opportunities for insurtechs at that point in time. And also in the more personal lines insurance, with life insurance, health insurance, we talk about longevity, all type of long-term care and other related products. We believe in here there is such a strong inherent growth, and combined with the overall push into digital in the market, we believe that this could be a very big opportunity going forward, not just for the incumbent, but especially for all of us around here on the insurtech side. But let me now hand over to my friend Simon to look into how we think about the even higher expectations ahead.
As Jörg mentioned, expectations are as high as never before. Many different stakeholders expect a lot from insurtechs to come over the next months, over the next years. When you just look at market expectations from the stock market, we picked here 4 examples. As you know, many insurtechs now went to the public markets, they IPO'd. We have picked here 4 examples from the US. And you see that the multiples are quite interesting, and they don't compare with typical insurance companies at all. When you compare top line, here in the cases of Lemonade and Root, we took the premium volume, or sales in the case of Select, Quote, and Duck Creek, you see very factors compared to their market valuation. Factors of 17, 11, 5, 26, which is very uncommon, as said. I mean, if you look at traditional insurance companies, they often achieve a multiple of 1, maybe 2, but not these multiples. This shows there's a lot expected from the market that insurtechs will hopefully deliver soon. Then when you look into private funding, you see that this is also at peak levels. So private investors believe in insurtechs. 2019 was a record year, but also 2020 is now continuing that route. Despite COVID, as Jörg mentioned in the beginning, we still see a lot of momentum. We see that insurtechs are getting nice fundraisings around the globe. We see that actually Europe is lagging a bit behind. Europe received about 20% in 2019. The number now is a bit lower of the total funding volume globally. We see that in Europe, Germany and UK attract most funds, but also other countries. Insurtech is quite widespread, as we also experience here at DIA. And I think what is also important to mention is that we are slowly moving away from a lot of seed funding to more senior rounds. Yeah? We are seeing more early stage funding rounds picking up. And all this led, as a result, to quite some sizable insurtechs also here in Europe. I mean, not to the same extent as the US yet, or some Asian ecosystems, if you compare to that. But we see in Europe there are sizable insurtechs, first unicorns emerging, several hundred millions of dollars raised that can now be spent for innovation, for customer acquisition, for fine-tuning the product, and most importantly also for scaling up the businesses.
If we look now into the market, we see currently what we call here many followers and also many attackers. Let's have a look at them. So on the one side, there's for sure the incumbents. You have all the big household names from Allianz, AXA, Zurich, all of them pushing large-scale digitization efforts. And they also kind of realize that, especially in this environment, the switch, especially on the sales side, but also in all the other core processes as outlined before, is instrumental, both to get additional benefits and efficiencies, but also to get to the customer experience, which is really needed. At the same point in time, for sure, and we also talked last year about it, there's big tech coming into the game. We talked about last year's example of Tencent offering in Asia dramatically new solutions. There's others. We had Jonathan Larson with us to talk about Ping An and their innovations in that space, but also Amazon is building up, and we're going to talk about that in a second. But in addition to these two known players, we believe there's more and more also non-insurers coming into the game. We see that also joining forces with new platforms emerging, players like IKEA finding new solutions in the insurance space. We know that Apple is successfully driving insurance business already since quite a long time. And for sure, also Tesla with their new insurance product, which is about to be launched in various markets, is something to watch out. When we now look into it and think about it from the perspective of both the insurer and also the kind of insurtech, both working together, the big question Alex Rampel here from Andreessen Horowitz was rightly asking is, the battle is always out there. And the question is, and it comes down whether the startup gets the distribution first with all the new ideas and all the new firepower, or the incumbents get the innovation. But as we also outlined sometime before, we believe that often the combination of the two will bring very, very successful results. But let's just jump into it. And on one of the following pages, we now outline who the new attackers and the new followers are. As said before, we looked into it. And when you look also into big tech, last time the discussion was on Asia, Ping An, Tencent. I think also this time we continue to need to watch out. We have Amazon, you know, with a detailed push of motor vehicle insurance in India. We know that there is new other products being launched in the Amazon Protect space, and that there's also increasing focus on the insurance space. So we continue to believe that the tech players will play an important role into that game. But it's not just them. It's also, as briefly indicated before, non-insurers. And that is the space which is also from the insurtech perspective, highly relevant. So we currently see at least 3 models how non-insurers think about their insurance play and their insurance offering going forward. And there is a clear tendency of moving from a pure outsourcing towards more joint ownership models. Let me explain to you what that means. On the pure outsourcing or more affinity models, we see examples of some of the travel companies or also some of the big retailers where the insurance company is actually selling more or less the standard products, slightly adapted to the context via their sales process and linking to a platform. That's for sure interesting for lots of the non-insurers, but increasingly they are realizing that there is a larger value pool behind. So when you read the media and you analyze, you see that Apple is already successfully playing that space, and others like the car companies with the recent announcement of Daimler and Movings are also moving into that space and saying, let's get a stronger grip around that insurance value chain, both to tap into the value pools, but also to get a better understanding of how can I develop a product which really fits to my customer needs? How do I make sure the processes, especially on the claim side, work the way I want? And lastly, also to for sure leverage the customer access and the customer data. And even beyond that, there's a few other players, and that makes it from our perspective also highly relevant and interesting, like Tesla or also some of the rental companies who say, we even move one step further and we want to own the insurance business. So we build our own solutions and our own carriers. All of that together is, I think, an interesting context for the insurtechs to see that there is new opportunities to work together with all these type of new models and get into touch and say, how can we link our ideas and our solutions into that? But at the same point in time, it's also new players to watch out and see how they are competing also with the insurtechs and how this ecosystem is evolving going forward. Let me hand over now again to Simon, who will outline our perspective on how to scale a successful insurtech now over the next 2-3 years.
As Jörg mentioned, we want to talk about Boost. I mean, all that we have told you about today leads to this key message that we wanted to discuss today. Now is the time to boost. Now is the time to scale up. And actually, when you look at the current situation of many insurtechs, scale has not been achieved. The products are great. There are many, many new ideas. There's a lot of capital. The market environment is positive, but the actual success in scaling up the business has yet to come. And this is the important thing now going forward. So when you look at the largest 5 insurtechs, for example, in the US, which we did here in this analysis, and you compare those to the incumbents in the US, you find that the marketing spend is very, very low compared to those, less than $500 million. The incumbents spend much more than 10 billion, depending on how you cut it and which products you include. Also, customer retention rates are not at the level of the retention rates that incumbents achieve. So we see 60% at best with insurtech businesses. Some have lower retention rates. The incumbents have higher retention rates. And all this leads to a market share that is, if you combine the largest five, it leads to 0.1% market share. So there is still a lot to do to scale up those businesses. As we said earlier, the environment is good, expectations are there, so something needs to happen now. The good thing is when you look at where most value is created, it actually is in this next phase, in the scale-up phase. So we find that when you look at the US VC capital allocation, that 2/3 of it is in the scale-up phase. So most money is allocated to that phase. The average return is a bit higher in that phase, which leads to the situation that 2/3 of all returns here are created in that scale-up phase and not in the build-up phase. It's very important, however, to do this fast. Speed matters in insurance markets. We have seen this with digital motor insurance, which started already a decade or even longer ago. We see that the players that have started early, built up their brands, established a unique proposition, are now able to capture most of the growth and the profits in the market. Here are just 2 examples from Germany and Spain, and we like to bring those almost every year with updated figures, but the message stays always the same. The largest players capture a vast majority of the profits in the market and actually also of the growth. All other players combined are often negative, so that the total profit in that market is lower than the one that the number 1 player makes. And this is true in these examples. This is also true in many other markets, like Italy, for example. But you can basically look everywhere. Then the situation is, however, not easy. We also know from other industries, from the startup business, that scaling up companies does not always work. Actually, it only works in about 1 out of 5 cases. So we looked here into the total number of successfully built products and then how they evolved over time. And we looked into these 1,762 companies. 5% died and were inactive quite soon. So that's actually a good message. Most companies find a way to survive. However, almost half of those, 46%, basically don't scale. Yeah? So they stay small, they might be able to get additional funding, they break even, but they don't scale further. Then there's a portion, 27% in the sample, that are taken over. So don't scale on their own. And 22% really make it on their own. So they scale up independently and successfully. Now, coming back to the insurance business, what are really the challenges and the opportunities ahead? We asked a group of about 50 CEOs of digital insurers recently where they see the big things to tackle now in the future. And I mean, the outcome is quite clear. They see the biggest challenges with growth and profitability, actually. They see challenges with churn. We saw the customer retention rates a minute ago. They see challenges with customer acquisition. And then also with all kinds of new players, established players, basically competition in the market from aggregators, from Amazon, as Jörg mentioned, from other insurtechs. So there are many challenges ahead, but we also are quite optimistic that they can be overcome. And the players that now act smartly can actually win in this situation. At least 1 out of 5 will win. And we are quite optimistic for the insurtech space here also. So let us close with some ingredients for success. Of course, we cannot go into very much detail here, but when we support the scale-up phase of insurtech businesses, we find 5 common themes that always occur. One is a very thorough strategy for the go-to-market part. So having the right strategy for customer acquisition, not just doing performance marketing, the standard tools, but really a sophisticated strategy here that has a long-term horizon and realistic investment budgets behind. Tech is, of course, important. I mean, we are talking about insured tech. So this is one differentiating factor, and scaling up the core platform is one ingredient for success. Governance is also actually quite important. We find that many strategics have invested into insurtechs. Actually, in our database, we see that even 50% of insurtech funding is done by other insurance companies. And to set up an effective governance for these cases is not so easy. Insurtechs need to have the entrepreneurial freedom. And also they need the capital. Fortunately, there are opportunities to raise capital, as we saw earlier, but this, of course, needs to be done also smartly and with a long-term horizon. You cannot expect to break even within 1, 2, or even 3 years. And last but not least, and in our view, most critical, is the people dimension. I mean, attracting talent is probably a bit easier, especially when it comes to tech talent for insurtechs, but they compete with other industries as well. And insurance is often not the natural industry for tech people to go to. So this will also become a differentiating factor when you scale up the business for insurtechs. You don't need only 5 data scientists or 10. You need many more people with various backgrounds to scale up the business successfully. So you need a strategy behind. Let us conclude here. We hope that we could illustrate the big opportunity that is out there for insurtechs now in the next months and years ahead. The environment is good. We have a lot of support from the capital markets, from private funding. We have a good starting position, great products, but we also see the need to act now, to scale up now, because new entrants will be there, because the winner takes it all for all the other reasons we showed. So it's now time to act. And we are very excited about what's to come in the next chapter of the insurtech world. Thank you very much.